Analyst. Brett, thanks for being here. This one definitely has caught our eye a lot this year, right? Because it's one of these groups that can benefit when rates are going down, and then there's the whole data center or AI thesis here. What do you make of what we've been seeing from utilities?
Yeah, I think when we look at utilities, we see a sort of collection of catalysts playing out for once. Usually this group is just looked at purely as a flight to safety group, a name, a group of stocks that investors can go to for stable cash flows, for slow but steady revenue growth. And when we, get to periods where volatility spikes, kind of like what we're seeing right now, we do sort of tend to see that flow into utilities where people are trying to hide out and protect themselves from some of that volatility. But I think when we look at the group now, there's actually a collection of other catalysts at play. You mentioned the AI theme helping drive some of these names, and I think that's a great story talking point. But when you look at some of the more hard data, the hard numbers, they pan out well for the group too. Specifically, earnings growth is expected to be for 2024. Annual earnings growth is expected to be the best year of growth since 2009, coming in at 10.8%. And that's not coming off of a bad year the year before. In 2023, earnings grew almost 9% for this group. So we're looking at pretty solid earnings growth, and earnings growth without an attractive valuation. You could argue it doesn't matter, but in this case, that valuation actually is pretty attractive. Coming into, we've had a pretty big rally over the last month, which doesn't help the valuation argument. But, we came into July looking at 15 to 16 times forward earnings, which is not only cheap compared to the S&P, but on a relative basis, it's also pretty cheap. This group tends to trade about 18 times forward earnings. So when you look at those, the earnings and the valuation, now the Fed is on, it's expected to cut rates, in September. That's another catalyst. So I think a lot of things are kind of lining up for utilities.
Another defensive sector traditionally would be healthcare. Brett, I'm just curious to get your thoughts there.
Healthcare is another great looking group. A lot of the individual names here have been trading really well, whether you look, at AbbVie, Thermo Fisher, Johnson & Johnson's been coming back lately. So I think when you look at healthcare, they've been kind of middle of the pack as it relates to when you look at the year-to-date returns for S&P sectors. But overall, this group continues to trade well, and kind of like utilities over the last few days, probably a little bit of a flight to quality. Investors looking for secular growth, a little bit more defensive positioning. But overall, this group continues to trade pretty well. I think you look at Eli Lilly, that's kind of the all-star of healthcare. Well, at one point, it was knocking on the door of $1 trillion valuation. So I'd be curious to see how that name starts to hold up here in the next couple days and weeks. Just as it's pulled back about 20%. So seeing how investors react to that type of rotation we've seen out of some of the bigger names, very curious to see how that goes.
You speak about rotation. It's funny because we've talked a lot about rotation recently. Most of it's focused sort of on the small caps, but these other groups that you're talking about definitely have been beneficiaries. Utilities, healthcare, consumer staples, for example, which are also outperforming today. What kind of options activity have we seen in the markets to support these moves? In other words, does it seem like people think this is going to last?
That's a really good question. And it's really interesting when you start to look at the options market and the market in general, and you start to look at different time frames. And, can we keep going down in the short term, and can we continue to see this rotation, specifically this rotation out of mega cap tech and large cap names and the flow into small and mid cap names? And yes, we can continue to see that type of rotation. But the sort of the catalyst behind the small cap trade, which it's been due to play catch up, right? But we've kind of seen that take a little bit of a hit these last few days as investors worry about the bigger picture, the economy, the macro risks, and we're sort of seeing some of that money come back out of small caps. I think small caps can continue to do well, provided that we see the economy hold up, and provided that some of these recession fears don't come to fruition. But overall, I don't expect necessarily that rotation out of mega cap to continue for all that long. When you look at the mega cap names, specifically, I mentioned Eli Lilly, but when you look at the Magnificent Seven, these are not only the most liquid and popular names in the market, but they're also the best businesses in the market. They have robust cash flows, strong balance sheets, pretty steady earnings, great margins typically. So I think that at some point, investors are going to start circling back at these names. You see NVIDIA down 25%, Google and Microsoft down 13%. Amazon, I think, was knocking on the door of down 20% today. So at some point, investors are going to circle back to these names maybe later this year.
Brett, great to have you on the show today. Thanks so much. Appreciate it.
Yeah, thanks for having me.